Imagine your entire life being judged by 3 digits. Not your character, not your work ethic, not how hard you try, just a number. In America, this number can decide where you live, how much you pay, whether you get approved, and sometimes even whether you get hired. This is the hidden power of the credit score. And for millions of Americans, it quietly controls everything. Most people know credit scores matter, but very few understand how strange the system actually is. A credit score is basically a number that tells lenders how risky you are, usually between 300 and 850. Higher score, you look trustworthy. Lower score, you look dangerous. Sounds simple, but here's the weird part. To prove you're financially responsible, you often need to borrow money first. Think about that. You need debt to prove you can handle debt. No credit history. That can be almost as bad as bad credit. It's one of the few systems where having no record can hurt you. And for young adults entering life, that's where the trap begins. Imagine turning 18. You don't own a house. You don't have a car loan. You've never borrowed money. Sounds financially safe, right? Wrong. In America, lenders may see you as unproven. So what happens? Banks offer starter credit cards, low limits, tempting rewards, cashback, travel points, special offers. At first it feels harmless. Buy groceries, pay for gas, use it responsibly. But the system slowly teaches a behavior. Borrow, repay, borrow again. Keep playing. Because your score improves when you stay active in the game. The economy doesn't reward staying outside the system. It rewards participation. This is where things get serious. Most people think credit scores only matter for loans. Not true. Want to rent an apartment? Landlords check credit. Need a car? Loan approval depends on credit. Want lower interest rates? Credit. Buying a home? Credit. Insurance pricing? Sometimes credit. Even certain employers may review financial history. So suddenly one number starts touching every part of life. And if your score drops, life becomes more expensive. That's the cruel part. If you're already struggling financially, you often pay more. Higher loan rates, security deposits, rejected applications, more stress. Bad credit doesn't just reflect hardship, it can create more hardship. Let's say life goes wrong. Medical emergency, job loss, unexpected bills. You miss one payment, credit score drops. Now borrowing becomes expensive. Interest rates climb, minimum payments grow, debt becomes harder to escape. And because stress causes bad financial decisions, the cycle gets worse. Miss another payment, use another credit card, balance grows, score falls further. This isn't just bad budgeting. Sometimes it's survival. And the system punishes survival decisions. That's why millions stay stuck for years. Not because they're irresponsible, because escaping gets harder the deeper you fall. So who wins? Banks, credit card companies, lenders, financial institutions. Because the ideal customer isn't someone who never borrows. It's someone who borrows consistently. Interest payments create profits, fees create profits, late charges create profits. The entire system becomes incredibly profitable when people remain dependent on credit. That doesn't mean credit itself is evil. Used carefully, it can help. But the structure creates incentives that keep people participating. And once you understand that, the system looks very different. Is America's credit score system protecting lenders or quietly controlling people? Because when one number affects housing, borrowing, insurance, and everyday opportunity, it stops feeling like a financial tool. It starts feeling like social control. If you enjoyed this breakdown, subscribe to America Explained. Because the systems shaping life are often hidden in plain sight.